Okay. Let's first look at the sectors. I can hear somebody chewing gum very loud. Okay, so these are the closing prices as of 4 p.m. today. If you rank these spider sectors, energy is at the top. And the chart for energy looks pretty good, but it's not really something I would invest in at the moment, and I'll go through the logic a little bit. If you look at XLE, this is what the chart looks like. It's going sideways right now, but it's not going down like everything else. Let's go back. The only other thing which S&P oil and gas equipment, similar pattern, XL, XES. So it's trying to break up. So when it does, we will know, and then maybe then you can go into oil and gas equipment. Let me go back. So these are the only two bright spots, XLE and XES. And neither one of them really scream at you to invest. And next, let's go to my leveraged ETFs. I have total of, I took some of these out because there was a duplicate ETFs from two different investment companies. So, so I whittled it down to 42, and then they are ranked in a similar fashion. Right at the top is the natural gas. It's the, let's look at the chart for natural gas. It is trying to come up, and that would be something you can look into investing right now. I'm not at the moment. Year to date, it's down 91. And from 52-week high, it's down 92%. It's very, it doesn't look here this way, but it is quite volatile. As you can see, it dropped from back in July to, and didn't go anywhere. And now it is trying to come up, and something to look and watch, see what happens. Next is TMW, which is a inverse of 20-year treasuries. And the chart looks very, very good. And it's been going up for a while. As you can see, it's pretty much right at the top of 52-week high, which was yesterday. That was the 52-week high, and it dropped a little bit today, about 1 point. Let's see, it dropped 0.6% today. Everybody was looking for a follow-through day today, including IBD. They put it in their last week, when Thursday there was a rally attempt, and they said maybe by Monday or Tuesday there will be a follow-through. In the morning, it definitely looked like it. All the indexes were up, and looked like the volume was going to be high also, but everything kind of faded and it didn't quite make it. So at this point, there was no follow-up today. Maybe this week sometime there will be, and that's when we can look into long ETFs. The other this is the short. It's a bear. The chip stocks, the semiconductors, 3 times leveraged. It's still in good shape. It has not deteriorated like everything else. We'll see what happens. It's going pretty much sideways, down, up, down. Didn't do much today. So that is so of all the leverage funds I follow, I was kicked out of SQQQ, or stopped out rather. And let's look at the SQQQ. It was doing really well until this happened, and it went below the chandelier exit, and I was stopped out. I went back in on the 10th or 7th until today. So I was stopped out today. So at this point, I'm pretty much not, the only funds I own is XSO, XS, and TMW. And I have a feeling I'm going to be stopped out of SOX soon, unless the chips, the semiconductors start to go down again. We will see. This is an inverse ETF. So at this point, there is really no point going long in ETFs. Just have to wait. And my gut feeling is the market is going to stay this way until after the election. So unless there is a follow-through day, a large increase in the S&P 500 and NASDAQ on a large volume, we will see. That did not happen today. And another thing I noticed in the IBD, even if today they talk about 21-day exponential moving average, and that's why if you look at a faint curve, very faint curve, I put that in just to see how, if we can use the 21 exponential moving average also. In terms of buy and hold, TQQ is doing pretty badly. Year-to-date return is down 76.2%, and drawdown from the 52-week high is 77%. I think during the day it was even worse, but that's the buy and hold. And if you want to look at the results, it's not negative yet, but it could be soon. Oh boy, let me refresh this. Okay. There's something wrong with the data feed right now, but it's about 50,000 invested in back May of 2020. It's about 65,000 right now, with a no, 58,000 with the annualized return of 6.3%. So buy and hold is not doing very well. The drawdown for that experiment is 86%. So that is kind of gut wrenching. In terms of market timing, I got whipsawed here. Sold it at 46.96 because of it gave you a sell signal and then went back on 10.10 and lost 7% of that. But year to date, it's about 77%, which is not bad. But so I've had 1, 2, 3, 4 losing trades. Let's see what else. Now, if anybody wants to look at any of the chart with my clear method, we can go through that. Otherwise, that's all I had to present.
Thank you, Taljit.
Yep, you're welcome.